When might crypto hit all-time highs again? Let's be honest, the crypto market is sending some deeply confusing signals right now. On one hand, the fear and greed index just hit a record low of 5, screaming extreme fear. Prices are struggling, and you can hear the whispers of a long, cold crypto winter. On the other hand, the world's largest financial institutions aren't just testing the waters anymore, they're diving in headfirst. So while many retail investors are understandably nervous, and experts are debating the next leg down, they might be missing the forest for the trees. The pain we're seeing in the market isn't necessarily the beginning of the end, it's what a market reset looks like before the next big move. The data doesn't scream crypto winter to me, it points to a compelling timeline for the next all-time high. In this video, we're going to cut through the noise, look at historical cycles, follow the big money, and lay out the case for when crypto could hit its next explosive peak. Alright, let's get right to it. My thesis is that despite all the fear, a powerful mix of historical patterns and unprecedented institutional buying points to the next major market peak happening sometime in late 2026 or early 2027. This isn't just a guess, it's a conclusion based on 3 key pillars: the market's historical blueprint, the new wave of institutional capital, and on-chain data that shows us what's really happening behind the scenes. First, the historical blueprint. Crypto, and Bitcoin in particular, has always moved in predictable 4-year cycles. These cycles have 4 phases. It starts with the accumulation phase. This feels like where we are right now. Prices are way down from their highs, the media has lost interest, and the general feeling is bearish. This is when forward-thinking investors, the smart money, start buying at a discount while others get shaken out. Next is the markup phase, the bull market everyone's waiting for. As sentiment slowly improves, prices start to climb. Good news and growing adoption create a FOMO feedback loop, pulling in tons of new investors and sending prices vertical. After that peak, we get the distribution phase. This is where early investors start taking profits. Volume is high, but the price struggles to push higher as buyers and sellers battle it out. Finally, we hit the markdown phase, the bear market. Sellers take over, optimism turns to despair, and prices head down, leading us right back to a new accumulation phase. Historically, the Bitcoin halving is the event that kicks this whole cycle off. It happens every 4 years and cuts the supply of new Bitcoin in half. The supply shock clashing with growing demand is what has typically ignited the bull run. Based on this pattern alone, the period after the last halving puts late 2026 or early 2027 right in the window for a new market top. But this time, something is fundamentally different. This cycle is being supercharged by a force we've never seen before, a tsunami of institutional money. This brings me to my second and most important point. For years, the talk was about institutions coming. Well, they're here, and they're changing the game. We're no longer talking about speculative interest, we're talking about strategic, long-term allocations from the biggest names in finance. Nearly 86% of institutional investors either already hold or plan to hold digital assets in their portfolios. The launch of spot Bitcoin and Ethereum ETFs created a regulated bridge for trillions of dollars to flow into crypto. This isn't a fad, it's a structural rewiring of the financial world. Institutions aren't asking if they should get in anymore, they're figuring out how fast. This brings us to the third pillar, the data on the ground. Right now, the crypto fear and greed index is flashing extreme fear with a record low score of 5. To the average person, that's terrifying, but to a seasoned analyst, that's a massive contrarian indicator. Historically, moments of extreme fear, when all the optimism has been washed out, have been the points of maximum financial opportunity. This is the signature of an accumulation phase, not a market top. And while technicals show Bitcoin struggling under key moving averages, suggesting a short-term downtrend, this is exactly the kind of price action we see during these reset periods. The market is building a base before its next major move up. So, what are the experts predicting for this next peak? Forecasts for 2026 vary, but the direction is consistent. More conservative models, like from CoinCodex, project a year-end 2026 price for Bitcoin around $78,708. However, predictions that factor in this new institutional demand are much more bullish. Standard Chartered, despite recently lowering its near-term forecast, still sees Bitcoin reaching $100,000 by the end of 2026 and $200,000 in 2027. Asset manager Bitwise also predicts Bitcoin will hit a new all-time high in 2026, driven by overwhelming institutional demand from ETFs. So, what does a rising Bitcoin mean for the rest of the crypto market? A rising tide lifts all boats, but it doesn't lift them all at once. In crypto, capital tends to follow a pattern. First, it floods into Bitcoin. Once Bitcoin sets a new high, profits often rotate into major altcoins like Ethereum, and then trickle down into smaller projects in what we call altcoin season. Ethereum in particular looks poised for a massive move. It's not just a platform for DeFi and NFTs anymore. It's becoming the settlement layer for tokenizing real-world assets. Institutions aren't just buying Bitcoin, they're building the future of finance on Ethereum. Just like with Bitcoin, predictions for Ethereum's peak are all over the map. Standard Chartered has revised its 2026 target to around $4,000, pointing to some recent weakness in ETF inflows. However, other more bullish forecasters believe this profoundly underestimates Ethereum's potential. Analysts focused on the tokenization trend see ETH reaching between $7,000 and $9,000 in 2026. Bitwise has also noted that institutional ETF demand will be a major driver for both Ethereum and even Solana, showing that big money is looking beyond just Bitcoin. The key takeaway is that projects with real-world utility and strong network effects are in the best position to capture this next wave of capital. Now, let's be real. This timeline isn't guaranteed. A few things could slow us down. Persistently high inflation could keep monetary policy tight, which is bad for risk assets like crypto. A major, unexpected regulatory crackdown could spook the institutional money that's just starting to arrive. And of course, the ETF inflows we're seeing could turn into outflows if the broader economy takes a sharp negative turn. This is not going to be a smooth, straight line to the top. Volatility is a feature of this market, not a bug. But even with those risks, the core idea remains powerful. The current climate of extreme fear isn't a reason to run for the hills, it's a classic sign of an accumulation phase. But this isn't just another cycle. The arrival of serious, strategic institutional capital is a fundamental shift for the entire asset class. This is the first cycle where crypto has a regulated and insured bridge to the traditional financial system. While the journey will be wild, the combination of the historical 4-year cycle, the unprecedented wave of institutional adoption, and clear on-chain signals of accumulation points strongly toward late 2026 to early 2027 as the window when the crypto market won't just reach, but shatter its previous all-time highs. If you want to stay updated on how this all plays out and get regular analysis on the crypto market, make sure to subscribe and hit that notification bell. The rest of this year could be life-changing and you won't want to miss what happens next.